Well, it's very nice to be here again.
Well, we thank you very much for your input, because you've got some pretty, in your yesterday's newsletter, you've got some pretty scathing comments in there. It looks like we're not out of the woods yet, even though we've hit that 8,000 mark. What is your response? What do you think is going on here?
Well, as far as the market's concerned, people have to understand that under executive order, the Working Group on Financial Markets, which is part of the U.S. Treasury, is allowed to go into the market and manipulate it. And so the move that you have seen from 6,600 to 8,000 on the Dow was aided and abetted by the U.S. government. With that said, we're looking at a very, very overbought market, especially in a short-term basis. We're also looking at dreadful earnings reports, which start this coming week, the week that we're in. And the Geithner plan to prop stocks up by, excuse me, the different programs that the government is instituting, and of course the doing away with the mark-to-market FASB accounting has helped the market, and now we have bond monetization coming through this new program, which is where the bonds which are held by banks that are held on their books at 90 cents on the dollar and really worth 30 cents on the dollar to be removed, go to public-private investors, guaranteed against loss, which the American taxpayer will take. And, of course, late last week, we had Alistair Darling, who is the equivalent of the Secretary of the Treasury in England, come out and say that, well, the IMF's going to sell 403 tons of gold, but they may sell more than that. And, of course, that was an untrue statement. And as it is, the IMF has applied about a year and a half ago, to sell 403 tons of gold to raise money. What he forgot to tell you is that central banks are standing in line to buy that gold because they want to get rid of dollars. And some of them don't have much gold at all, like China. And Russia's trying to get more as well, so that gold will never hit the market. And even if they attempt to do so, the U.S. legislature has to approve that sale. So, all we've seen is a plethora of market rigging one way or the other. And this market's going to go back down again.
Okay, so the market's going to go down again. What's going to happen with gold and silver?
Gold and silver will probably base out between 880 and 900 and then make another attack on 1,000. We've seen central bank selling. We've seen central bank transfers from the European Central Bank to COMEX to allow them to meet the demand for delivery. And incidentally, April's demand is already about 34% of the eligible gold that can be paid to those contract holders. And the normal takedown of physical gold off of gold futures contracts is usually less than 1%. So there's a very large number of contract buyers who are taking delivery. And so that's going to continue to put upward pressure on gold, and there's a very big short position. And shorts eventually have to cover. In other words, they bet gold is going to go down, and in order to make money, they have to buy it back again. And I think you're going to see that start to begin because there's a very large short position, almost double what it normally is.
Well, what is
so? I think gold should base out in here.
What do you think, or what does the ownership of gold vis-a-vis each country that owns it, what is the importance of that? If China has, 20 million pounds of gold, and England has 10 million pounds, and the U.S. has 2 million pounds, I mean, what is the relevant meaning of that? I mean, what does that tell us? Are countries trying to get gold rich?
There's some collateralization to the currency, whether it's issued by a national country, or in the case of England, the United States, issued by private corporations. under license, if you might say, from government. And the collateralization is gold. And if you don't have any gold, you have a fiat currency. You have nothing backing it. Figuratively, you might say, if for every dollar that was outstanding, we had a quarter of an ounce of gold or something like that, then the public, under gold standard, might be able to, probably could be able to, take delivery of gold versus the currency. But that's not the case. Historically, up until August the 15th, 1971, other countries could ask the United States for gold in exchange for the dollars that they held, and the United States stopped doing that. And so when you have a fiat currency, you have nothing behind it. When you have a gold-backed currency, you have a currency where others can demand. And in the recent instance, countries can demand that you deliver gold against the currencies that they deliver back to you.
Well, what is the outcome of the G20 meeting, do you think? Do you think that it was for show? Do you think a lot more was conducted under the cover of darkness that we'll never know about? Of course, Gordon Brown came out with a statement of we're beginning the new world order. What do you think were the important issues of the G20 meeting?
Well, I don't think they accomplished an awful lot other than propaganda. It was a love fest, if you may. And everybody was going around hugging each other and patting each other on the back, abrazos, if you may. And the whole thing was scripted from one end to the other. Nobody said anything untoward against anybody else. And as far as an alternative international monetary unit being used, very little was said, with the exception of the use of SDRs, special drawing rights, which are issued by the IMF and which are worthless. I mean, there's nothing backing them either. And so it's just another faux method of increasing the money supply of some kind or another, in this case SDRs. The United States does it every day, and so do most other governments. But the SDR is not a solution for them. The only real solution for them is a world currency, and they didn't talk about that, nor did they talk about using a basket of currencies. They only talked about the SDR, and this supposedly means a shift away from the dollar as the world reserve currency. And that may be so, but the alternative is worse, or at least as bad, as having the dollar as a reserve currency. They also said that they were going to have international control of all financial markets. That would be banks, insurance companies, brokerage firms, private equity companies, and that would be worldwide. And from my viewpoint, having been in this almost 50 years, I would say the chances of getting that are slim and none over the next 5 to 10 years. Maybe 8 or 10 years from now, but
the chance
of
getting what? The chance of getting control over banks and...
Yes, total international control. And they have to have that in order to have world government, along with the world currency as well. And so these things are far into the future. And so they really didn't accomplish very much. As again, as I said in the first sentence, it was a love fest.
You know, Jim Shepard was on the program the other day with New Millennium, Big Berkey, and he was talking about the fact that he's been studying the charts. He used to work with Merrill Lynch for 10 years, and he feels as though that this bailout money the recent bailout money has given us another 6 months to prepare for the next downturn. In other words, the next shoe to fall. Would you agree with that? Because that's given people a lot of peace in the fact that they can start preparing or continue preparing for the next 6 months, or do you think it's going to the next shoe will fall sooner than that?
Well, I am the official peace deliverer this morning. And I think it's going to take longer than that, because we have a stimulus package that begins next month that puts spendable money into people's hands. And the part of the stimulus package for this year is small, but the amount of money being shoveled into the system, $12.8 trillion worth, between the two of them, they're going to keep the economy from plunging.